The functioning of a closed-end fund is not easy. Before, we have understood that a fund is closed-end when investors put their money at the beginning of the fund and they exit only at the end, in order that the asset management company has the right time to invest in an illiquid investment like private equity. But the story is much more complicated and is regulated by a document which is named Internal Code of Activity, and this document is a set of rules approved by the supervisor that regulate the functioning of the closed-end fund itself. To understand the functioning of a closed-end fund, it's very useful to identify, in terms of timing, what are the different steps characterizing the life of a fund. The story of the fund doesn't start in the time zero. This is a surprise, but the story of a closed-end fund starts before the time zero, and this time before the time zero has got a length of 1.5 years maximum. This timing is named fundraising. The fundraising is 1.5 years. The asset management company has its own disposal to try to convince investors to commit their money into the closed-end fund. Just to give an idea, the law doesn't say anything, but the average size of a closed-end fund can range between 100 and 300 million euros on average all around Europe. We have evidence of a fund bigger than 300 million euros, but honestly, they are very big, and typically if a closed-end fund is bigger than 1 billion euro, we say it's a very large fund. Another aspect is that every investment of an investor, which is named one ticket, typically is fixed on an amount of 1 million euro. That means if you want to run a fundraising for a closed-end fund of 100 million euro, you have to convince 100 investors to commit 1 million euros each. Or if you are luckier, you can convince just simply 5 investors and they each commit 20 million euros. But however, fundraising, it's very tough. And just to give you some statistics, 50% of fundraising all around Europe are not able to get to the final results because it's very difficult, especially for poor, for young, for not highly reputed asset management company to convince investors to commit their money. If the asset management company is able to get to the entire amount of money, the fundraising comes to an end and the activity of the closed-end fund can start. But we have another surprise. In the time zero, investors don't have to give to the fund the entire amount of money, and this is a very smart decision because the asset management company doesn't have the possibility to invest such a big amount of money one shot in time zero because it's private equity, it's not public equity. The asset management company needs time. For this reason, the asset management company has the right to use maximum 3 years, and in these 3 years, we name this period as a drawdown period. Drawdown period is a period in which the asset management company has the possibility to ask to the investors to give a percentage of their commitment. Just to give an example, let's imagine we start a closed-end fund. The asset management company say, dear investor, give me the 10% of your commitment. And typically in 10 working days, investors has to give to the AMC 10% of their commitment. After the year 3, the entire amount of money has to be given to the closed-end fund, and the asset management company is free to navigate, to scout for new investment, to management investment, and especially to exit, to generate capital gain. And we approach to the end of the closed-end fund. Again, the law doesn't say anything, but on average, a sort of golden end of a closed-end fund all around Europe is 10 years. That means when we are approaching to the last of the 10 years, the asset management company has a right, an option. And the option is the possibility to use 3 years more. Why it happens? It happens because private equity is an illiquid investment. And what can happen is in the year 10, the closed-end fund doesn't have the entire liquidity, because most of private equity investment are still in place. So the asset management company must have the right to use 3 years more. So the asset management company can use these 3 years more to exit from the different investment, and when we get to the year 13 or before the year 13, the closed-end fund has to close the activity. That means the asset management company has to meet again the investors. They have to calculate what is the amount of money in the closed-end fund, hopefully a lot, and the asset management company has to spread the amount of money through the different investors accordingly with the amount of tickets they have invested in at the beginning in the fundraising.